These are 7 top stocks in pre-market with big percentage move today. While watching bullish pre-market price actions, let us inform you our review on IBO. Impact Biomedical Incorporated is a small biotech company that's all about early-stage innovation in healthcare and wellness. They don't really commercialize products themselves. Instead, they focus on discovering new tech, locking down patents, and then partnering with others to bring it to market. Their pipeline includes a wide mix of technologies, from oncology and inflammation treatments to sugar-based wellness formulations and even air purification systems. Now, here's where it gets interesting. The stock absolutely exploded in pre-market trading, up 121%. That's the kind of move that catches everyone's eye. But the thing with moves like this, especially for a smaller, less liquid name like Impact, is that they're often sparked by a catalyst we don't always see right away. Maybe patent news, licensing rumors, or even just speculative volume based on past announcements. This company has had a few intriguing concepts in the pipeline, like linebacker for potential use in cancer and neurodegenerative diseases. And that always brings attention when biotech sentiment heats up. But again, this isn't a name with big revenue or commercial milestones. So today's massive jump feels more speculative than anything grounded in fundamentals. For investors watching this kind of move, it's definitely a know what you're playing with moment. Impact Biomedical isn't your classic revenue-generating biotech. It's more of a patent shop with big ideas and potential upside, but also a high risk-reward profile. Moves like this can reverse just as quickly. So if you're jumping in, do it with eyes wide open. Our review on AREB. American Rebel Holdings Incorporated is a niche company that plays in the personal security space, blending gun safes and concealed carry gear with a strong lifestyle and branding angle. Think rugged, patriotic products, from fire-protected safes to concealed carry jackets, all wrapped in a very deliberate Americana vibe. They're not just selling products. They're selling a mindset and a mission around independence, freedom, and self-reliance. Now today, the stock is going wild, up over 100% pre-market, and the big trigger? A brand story video. Yeah, sounds simple, but it clearly hit a nerve. The video dives into the roots of the company, and more importantly, the emotional appeal behind the brand. Freedom, God, country, the American dream. It's playing right into their core audience. And investors are clearly reacting to how well it's resonating. This is the kind of move that feels like a wave of retail excitement, part brand momentum, part emotional connection. When a company taps into identity and culture like this, it can drive serious buzz. That said, it's important to separate that from fundamentals. The pop is exciting, but it's driven more by storytelling than financial results. So anyone jumping in now should be ready for volatility if the hype fades. Still, it's a great example of how branding, done right, can actually move the needle, especially for smaller companies trying to build a passionate customer and investor base. Our review on XHG, XChange TEC.INC, originally known for its apartment rental platform in China, just made a surprising but strategic leap. It's stepping into the insurance space. The company acquired a licensed insurance brokerage in Hong Kong, giving it direct access to one of Asia's key financial hubs and opening the door to offer customized insurance products, both in China and internationally. It's a big pivot from managing rentals and value-added services, like cleaning, to entering the financial services arena, but the market's clearly intrigued. Shares jumped 41% pre-market. This could be the start of XChange transforming into a broader tech and services player, not just a rental platform. Our review on MULN. Mullen Automotive Incorporated, a tech-driven EV company with vehicle plants in Mississippi and Indiana, is grabbing serious attention this morning. Shares are surging over 36% pre-market, and it's all tied to some major macro headlines. With President Trump rolling out fresh tariffs on imported vehicles and parts, 25% on auto imports with duties on components kicking in soon. Most of the auto industry is sweating. But Mullen? They're playing this one from a position of strength. Here's the deal. Mullen just confirmed that all of its commercial EV models, including those from Bollinger Motors, are fully built in the U.S. Even better, a majority of their parts are sourced domestically, 67% for Mullen and 71% for Bollinger. That makes them one of the few EV makers completely insulated from these new tariffs, which are already triggering warnings from big-name auto companies about rising prices, halted operations, and looming furloughs. And Mullen isn't just dodging a bullet. They're leaning into the moment. CEO David Meschery made it clear they're committed to U.S. sourcing, not just to avoid tariffs, but to maintain stable pricing and offer a reliable, cost-efficient option for businesses looking to electrify their fleets. Let's not forget, Mullen's got a growing lineup, from the Mullen 1 Class 1 cargo van to the heavier-duty Bollinger B4 truck. Bollinger even began delivering its Class 4 trucks last October, so this isn't just future hype. They're on the road already. In a landscape where most automakers are about to get squeezed, Mullen's positioning is making investors take notice. This isn't just a stock pop, it's a potential longer-term setup if they keep leaning into that domestic supply advantage. Our review on USAR. USA Rare Earth Incorporated is a vertically integrated supplier of rare earth metals and sintered neomagnets, and it's positioning itself as a key player in rebuilding a domestic supply chain for critical materials. Right now, the company is working on its NdFeB magnet manufacturing plant in Stillwater, Oklahoma, and it's looking to not only produce magnets in the U.S. This morning, shares are popping, up around 30% in the pre-market, and while there's no flashy headline driving the move, it's likely tied to growing investor interest in U.S.-based critical mineral plays. With all the noise lately around tariffs, trade tensions, and national security concerns over rare earth imports, especially from China, USA Rare Earth's focus on building a fully domestic operation is getting some well-timed attention. The company serves industries that are right at the heart of the modern economy: EVs, wind energy, semiconductors, defense, and robotics. And with Washington increasingly backing efforts to onshore this kind of production, the long-term narrative here is lining up with a lot of policy tailwinds. It's still an early-stage story, but in a market that's very sensitive to supply chain disruptions and geopolitical pressure, investors seem to be betting on USA Rare Earth as a name that could be in the right place at the right time. Our review on BDRX. Biodexa Pharmaceuticals PLC is a UK-based clinical-stage biotech company working to develop treatments for diseases with serious unmet medical needs. Their approach is centered around some really interesting technologies: long-acting injectables using 3D printing, ultra-small gold nanoparticle drug conjugates, and a nano-inclusion tech that helps make poorly soluble drugs more effective, even for things like direct-to-tumor delivery. Their pipeline includes treatments targeting brain cancer, schizophrenia, major depressive disorder, and more, with products like MTX-110 and MTD-201 showing promising potential. This morning, shares are up around 23% in the pre-market, and while there's no big headline driving the spike, it's clear that investors are starting to take notice. There's been a lot of chatter in the biotech space lately, especially around small-cap stocks that have pipelines full of potential but still have a lot of risk. But Biodexa's focus on hard-to-treat conditions, like the brain tumor MTX-110 targets, is definitely catching the eye of those looking for the next big thing in biotech. It's still early days for the company, but the science behind their technologies is definitely promising, and this jump could be a sign that the market is starting to get excited about the potential long-term upside. If the clinical trials continue to move in the right direction, this could be a stock to keep an eye on. Our review on ICCT. iCoreConnect Inc. is a cloud-based tech company that's all about helping healthcare businesses work smarter, not harder. They offer a ton of software solutions, over 16 in total, designed to make healthcare practices more efficient and profitable. Their products are used by dental and medical professionals, as well as IT experts, and they've got partnerships with more than 100 healthcare associations across the U.S. Some of their key tools include iCoreConnect, which helps with e-prescribing, and iCoreSecure, a platform to keep sensitive patient data safe. Right now, their stock is up 19% in pre-market trading, and while there hasn't been one big headline driving the jump, it's likely a sign that investors are excited about iCoreConnect's growing presence in the healthcare tech space. As healthcare providers continue to look for ways to improve their operations and meet strict compliance regulations, iCoreConnect's suite of software solutions is gaining traction. With so much focus on streamlining healthcare processes and improving patient care, iCoreConnect is in a great spot to capitalize on these trends. The stock move is a good indicator that the market sees potential in the company's ability to help healthcare businesses do more with less. It's definitely one to keep an eye on as they continue to expand. Please subscribe, give the video a like, and watch more from our playlist. Thanks.